Watch us live in conversation with Ramdev Agrawal on the power of quality.
Quality of business and quality of management, because that's the 90%, 95% of the investing. Quality is the starting point. If you don't have quality, it's not taking up the journey at all.
Watch us live in conversation with Ramdev Agrawal on 31st October at 11 a.m. as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Welcome to Bloomberg Quint, the top headlines of this hour. Indian markets look to end the week on a muted note, with the Nifty hovering around the mark of 10,300. Yes Bank is the worst Nifty performer today after the private lender's earnings revealed a gross underreporting of well over 6,300 crores in the last financial year. No such worries for United Spirits, which surged the most in 5 years after its bottom line doubled to this in the second quarter. And 4 Nifty companies, ICICI Bank, Indian Oil Corp, Maruti Suzuki and ITC, will report their quarterly earnings today. I am Agam Vakil, but we also have a slice of the conversation where my colleague Nishant Sharma speaks to Kiran Mazumdar-Shaw of Biocon to take us through this quarter's highlights. Let's listen in.
Small molecules, which is the key part of our business at the moment, de-grew 13%. And I think that was really the big impact that we felt on this quarter's numbers, both from a biologics growth perspective as well as the small molecules degrowth. I think small molecules degrowth is really attributable to 2 factors. One is, of course, the huge pricing pressure that our customers are feeling in the US market, which saw them basically reduce their presence and sales in the US market, which of course had a cascading impact on offtake from us in terms of APIs. But I think we are seeing a recovery from that position, and therefore for the rest of the year we hope that that will show some recovery. In terms of biologics, I think the main impact was on account of our plant modifications that we had to undertake in order to respond and comply with certain regulatory requirements that came out of these US FDA and EMA audits. That is now complete, and hopefully the rest of the year will see some recovery from this inability to grow these biologics businesses. Even if you are to correct for GST, we believe going forward a healthy double-digit growth is something that we will look at to sustain this kind of division.
And what are these regulatory issues that you faced in the emerging markets? Can you talk about that also?
No, so the regulatory issues are not issues. They are basically regulatory delays.
Okay.
So many of our products, like especially the biologics or the biosimilars, where we would have normally expected early regulatory approvals in certain markets, we have seen that there are certain delays because many of these emerging markets are getting to be as stringent as US FDA and EMA, which was not the case in the past. So regulatory approvals that used to take a very short time in the past are now taking much longer in many of these markets. So we have to basically wait it out.
Right. And one of the costs that impacted was the Malaysian facility.
Yes, the carrying costs of Malaysia is an inherent part of our business now.
Yes.
So although the OTA or the offtake agreement supplies are kind of defraying some of these costs, the carrying costs are pretty large.
Right.
So until we start supplying some of these markets, whether it's large emerging market opportunities or whether it's markets to Europe and US, only when that happens will you see this impact really going away.
The US FDA also gave you a response letter for pegfilgrastim, and the target action date was reset for December end.
No, I must correct you there. December 3rd is the target action date for trastuzumab, and that was basically a 3-month extension from September 3rd. We are on track for that. As far as the complete response letter for pegfilgrastim is concerned, that was given to us in October. And I think this is something that basically, although it has a complete response aspect on one side, on the other side, I think we are very pleased that the complete response letter basically sought, requalification data of plant modification, and therefore it had no concerns around biosimilarity or immunogenicity or PK/PD. So from a clinical point of view, from a scientific point of view, from a CMC point of view, there were no concerns. So basically it referred to updating our dossier in terms of certain plant requalification data, which at that time had not been even started.
Right. And lastly, how much is time path to recovery for the disruptions we saw, the plant disruptions, issues in the emerging markets?
So as far as plant disruptions are concerned, most of it is now complete. So going forward, we should be able to recover from in terms of our production and supplies.
Right.
In terms of other aspects, I would say that it all depends on when we get approvals.
Well, that was the management of Biocon talking to us about the outlook. But up next is Hot Money with Darshan Mehta. Darshan, take it away.
Thank you, Agam. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Joining us on the show today is Samir Kalra of Target Investing, who says trade the dips and invest the fall. Independent advisor Vivek Mawani expects a correction in the next few weeks, and Sharmila Joshi believes that markets will remain range-bound till the end of the year. Today on Hot Money, we will discuss Yes Bank, Reliance Infra, BHEL, IRB Infra and India Cements. Straight to the stock of the day, the counter is down over 8% in today's trade. Yes Bank reported numbers. The numbers were pretty much in line, but the big shocker was the divergence number that came in. What should one do with Yes Bank at this point of time? Should they buy, should they invest, or should they just avoid Yes Bank? I'll start with you, Sharmila. What did you make of the Yes Bank numbers and what should one do now?
Well, the numbers per se were absolutely fine. I don't think anyone had an issue with the number. The problem was with, as you said, the divergence. And we can argue ourselves, what to make of it. But very honestly, I think putting all that behind and looking at the kind of correction we've seen in the stock since trading commenced this morning post numbers, I would say that a lot of that negativity is captured. I think the moot point remains is that going ahead, what do you want to buy? Do you want to buy a bank which is showing good growth, whether it is NII, whether it is all the other parameters? Do you want to go with a bank like that? Or do you really want to invest in a bank where all those other, you don't tick those other boxes, but where you perceive sort of NPAs, etc., to be lower? So I think at current price, I'm really okay with Yes Bank. I think this is an issue which the bank had faced earlier as well, and we saw how they came out of that. So I think that they will continue to do well going forward. So I think for me at this point, at this price, I'm quite positive on this stock.
So, but you don't think that this diversion issue will trickle into the next few quarters? They will be able to handle it?
I think they will be able to handle it. I think definitely it will trickle because the way the last 2 quarters we have seen that this issue has persisted, and I think that in fact there will be more banks that will face it because all said and done, at the end of the day, perhaps what one can understand at the end of all this is that that some banks have recognized this earlier, which is why they're showing bigger NPAs, and some banks are a little slower to recognize this. So I think that said, we will probably see a little bit more of this concern, and the bank will have to deal with it, and we'll have to come to terms with the NPA picture as it emerges. But hopefully, I think that, given the kind of recapitalization one has seen on PSU banks, it will slowly mean that, this whole structure itself will correct itself, and you will see that demand sort of return in the broader economy, and hopefully a lot of these NPA issues will also get solved. So I think it will be a double thing. It will be the fact that the bank will deal with its problems, as well as that, I'm expecting a better outlook going ahead, given the kind of money that's likely to come into banking. So I think, as I said, I would continue to be positive on the stock at this point.
Okay, Vivek, do you agree with Sharmila in terms of what she said about Yes Bank, or do you think that this concern is much more in terms of, people maybe even talking about corporate governance or, the standard of what the disclosure? Is that a concern for you?
Absolutely. I would just like to borrow from what Charlie Munger has said, that, when you see a cockroach, it's never just one cockroach. It's a matter of time that a lot more cockroaches will come out. And what we have seen in some of the other banks, whether it was Axis Bank last week or Yes Bank, this issue has repeatedly been coming up about accounting, which is slightly more aggressive than banking is supposed to be a conservative business, but for Yes Bank and maybe even Axis, you can put Axis more so, accounting has been slightly aggressive, where issues, this has been, it's not something which is happening for the first time. It has been brought out earlier, but I think adequate corrective measures and prudence on part of the management is still leaves a lot to be desired. The massive re-rating which Yes Bank has seen over the last 2 to 3 years, part of it could actually reverse, because now we have had a sort of a negative surprise this quarter. I would wait if this recurs again. If it recurs, then you know that this is definitely going down the Axis Bank way. If, as Sharmila says, that they'll be able to manage it, it's only a matter of time, well, then I'll keep my fingers crossed. But I have no reason to be positive about Yes Bank at this point of time, so I would rather avoid it. There are a lot more other opportunities to chase in the market than Yes Bank.
But the management has already said in the conference call that half of it is already recovered. The balance is already sold to ARCs. So it's a very limited portion that is still left. Is that not something that would reassure you?
Sorry.
Oh yeah,
If you see the press release, so 27% has been taken as a recovered, 7% has been sold to ARCs, 47% they've upgraded to a standard asset.
Okay.
So that 47% still has the risk of becoming an NPA in next few quarters, or maybe they are more carrying forward so that next few quarters they can spread that NPA.
Okay.
So the actual impact of that divergence is not in the numbers as of now.
Okay.
So there could be next few quarters where those standard assets again become an NPA, and that hit comes spread it throughout rather than just on the one quarter.
Okay.
So that's where I see it a neutral kind of a view, because otherwise on the numbers and everything they have performed really well and they deserve that kind of valuation if we ignored this kind of.
So 2 times valuation is fine for the Yes Bank.
As in the amount of growth, like retail credit growth, they have shown around 80% on Y-on-Y and 15% on Q-on-Q, because they are more into corporate side. So for that kind of a retail growth, that will support the loan book, at least the growth part of it. So that is not the worry. So the valuations are decent enough, and I think the only thing to watch out is whether those standard assets become NPAs going forward.
Okay, so that's the view that's coming in on Yes Bank. We've got actually 3 different views that have come in on Yes Bank. Sharmila is very bullish, Vivek is bearish, Samir has a neutral view. He's saying that the asset quality or this divergence problem will persist, but in terms of financial, a 2-time price to book is fine for Yes Bank. So that's the view on Yes Bank. Let's move on to a next counter, and that is Reliance Infra. The deal with Adani Transmission is in the works. Will it happen? Will it happen? No one knows. But the management is making this effort to deleverage itself. And apart from it, there is this entire government push as far as infrastructure development is concerned. Samir, do you have a view on Reliance Infra?
I have a little bearish view on this because of 2 things. See, right now they are very heavy debted firm. So they are trying to get out of certain heavy debt businesses. Now their focus is EPC and defense. Going forward, what they talk about. Now EPC for them is around a 700 crore revenue kind of a thing. And EPC is more competitive. As in everyone is majority into EPC. So when you're that high debt, and even your deleveraging will not help you to get out of the whole debt which you have. So it becomes very difficult to fight for those tenders for the EPC part. As far as the defense part is concerned, if I want to participate in the defense, I rather go directly for the Reliance defense part if I see a future rather than going through Reliance Infra, which I don't think so a 30% stake will help me in gaining that. Secondly, the interest burden is very high on the firm. So 15 to 16 FY, there was a 20% increase on the interest payments. So which I think makes me a little bearish on the stock.
Okay. Do you share the same view, Vivek?
Not really. I mean, I'm willing to give the benefit of doubt to the management. Of course, last 10 years, the management has faltered and there is a negative perception, sentiment and questions being raised about even competency in terms of execution, which at one point of time, the Anil Ambani as part of RIL when he used to lead projects and all that. But I'm still willing to bet on the management because this is one of the few managements which has shown a serious intent to deleverage. They've actually sold assets, they've actually sold businesses, they sold the cement business, they've put even the Mumbai electricity transmission and distribution business on the block. I mean, they seem to be negotiating with Adani whether the deal happens or not. It shows the intent. If not Adani, somebody else may eventually buy it. And there seems to be a clear roadmap to bring down the debt, which was 29,000 crores as of March 17 to about 14,000 crores by the end of current year, which obviously is going to come not from operating cash flows, but by sale of businesses or assets. Valuation wise, I'm quite okay at about 490 or 495 levels. What I would like to see, which is what makes me positive, is with a more focused business on infrastructure and metro and railway projects going forward, I would like to see return on capital, return on equity at least move to at least 13, 14, 15%, which so far has not been happening. Longer term, I would like to see sustainable 15 to 18% range of return on equity, which probably they can do. It will be some fight, but I'm willing to stick my neck out on this.
No, but you're saying you yourself said that the management has done nothing in the last 10 years.
Yeah,
so what will they do now? And they're selling assets. So that and their core business is not growing. So what will they do in the next few years that will actually make them
it's basically
get these ROCs into double or return ratios into double digit?
Basically, if we look at just the infrastructure spending, I mean the kind of announcements which government has made, and over the next 2 to 5 years or 10 years, some projects are going to be very long dated, but India will actually have shortage of probably EPC and construction companies to execute such projects given the size of those projects. At least Reliance Infra has the track record to have those, I mean to take up those projects and execute, and which is what I'm betting my lot of those projects weren't available, and of course management had other challenges, other businesses. A lot of those challenging businesses they are exiting now.
So if I can jump in here, I think to just add to that, I think that more than what the management will do or whatever, I think what makes me sort of neutral on the stock and maybe okay with it at this price is the fact that they have done serious things to deleverage their book. They have put assets on the block. And I think in this kind of a market where we know there are so many players, especially in the space that they are in, EPC infra, there are so many players who have such a high level of leverage and they are going through such serious issues. If you find a company which is addressing the problem seriously, or which appears to be, as we all discuss, if that Adani deal, for instance, for the Mumbai transmission goes through, then that will be taken as a positive. So I think if you're actively working towards that, then you have to sort of give the management some credit for that they are addressing the problem absolutely square on, and they're willing to tackle this as an issue and bring their debt down significantly, which is the only reason why I'm really neutral on the stock. Otherwise, I sort of lean towards both sides. I do understand the negatives, but I do see this, that they are sort of trying to address the problems.
Okay, Samir, you had very quickly what you had to say, because
the only point is, the businesses they are trying to focus on are again a high debt businesses. They are not something which will turn into cash very next morning. So again, the debt management, how they take on in the next few years, that's more important.
Okay, so that's the view that's coming in on Reliance Infra. Again, for the second stock, we have divergent views that are coming in. Vivek is rather bullish on the counter. Samir has his doubt. Sharmila is rather neutral at this point of time, but believes that she will give the benefit of the doubt to the company because of the execution of new projects that could come in. Let's talk about the next stock, and that is BHEL. The counter is been up almost 15% this month. The government focus on PSU seems to be rubbing off on BHEL also. Is this just a sentimental move? Is there something really happening? Can the government really turn around BHEL? Let's ask our guest, Sharmila. Can the government turn around BHEL, or it's a gone story?
I would like to see them turn around because this story, because I think that in that space it is the behemoth, and the kind of book that it has. I mean, if you can turn around BHEL, it will be a clear pointer that there's a whole host of companies that they sort of cater to, which are also doing better, because it means that those are the companies giving them the orders in the power space. I mean, you name it. So that's typically what you would like to see happen. And the kind of price erosion again that we have seen on this stock is again something which is, I think, factoring in a lot of these negatives. And it's only off late as we are beginning to see that interest come into this PSU, whether it is because of divestment and lately because of this recapitalization news, etc., that make me sort of neutral on the stock. But otherwise, it's a little scary sort of a picture when the leader in the industry is, reporting these kind of muted numbers quarter on quarter. It sort of really makes you think of what is the kind of pain that the rest of the companies within that space are going through.
Samir, the entire, whatever you've read through, what the government is saying, infrastructure, yes. I've never heard the word power. BHEL basically deals with power equipment. That the government, I don't think is saying anything whether they would want to do anything with power. So how will that help BHEL?
So what's happening right now is, since last few days, the movement has been because of the Telangana order which they have started to execute, which is around 20,400. See, BHEL again is a project company. You cannot compare it to a product company or something like that. So where the execution is dependent on the client. So where the payments stop, the work stops.
Yes.
That's why it's able to maintain the debt-free status between the whole system. Now the whole point is they have a good amount of projects from Telangana government itself, which is a cash-rich state if you see the state financials. So now if this kind of order gets executed even alone, even if they don't do anything else, there will be a good amount of cash generation at the firm. Where they deploy it, that's more important.
Okay.
So I think it's not necessary to mention power as a reform, because it's already, everything is done for it. The only thing is now the generation part has to be more important. So that is the focus, and I think BHEL is one of the biggest players and will be one of the biggest beneficiaries.
Okay.
It's like an underdog right now because of the debt-free status it's maintained. That's why I like it more than anything else.
Vivek, will you bet on this underdog?
Not really. At best, I see BHEL continuing to be in a trading range where on the lower side you have 80 as a trading range, on the higher side you have closer to maybe 115, 120. So you have a fair enough range to play on the trading side. I think longer term, I mean, since you mentioned that in all the government's initiatives you don't hear power. What we don't hear is thermal power, but there's huge amount of initiatives on renewable power. Over the next 5 to 10 years or 20 years, I mean, the world is moving towards renewable power. So thermal in the total energy basket, even in India, incremental investments on thermal beyond what has already happened in the last 10 years, I doubt if there will be large orders, a UMPP kind of projects being taken up in the next 5 years or so. BHEL is actually placed there, and it's going to be in a business which probably will not support that growth at a sectoral level itself. It's trying to do other things like manufacture of metro rail coaches and the railway locomotives, which anyway has been an old business, but now there is a greater thrust on part of railways also to do that. But all of that may not compensate for slowdown or lack of investment or lack of big ticket investment in thermal. I mean, Samir mentioned of the Telangana order, which is what the market has got excited about, but that's a one-off order. How many such 20,000 crore projects are happening or likely to happen in the next 5 years, which will give BHEL earnings visibility that, okay, they have the order book, they have the projects, which gives me that certainty of improving margins, improving return on capital, and so on and so forth. Which is why I say, I think market will keep getting excited about certain news flows from time to time. And at best, it's a trading stock where 80, 85 is the lower end of the range. Upper end is maybe 115, 120, and one can keep trading within that periodically.
Okay, Samir, you had something very quickly.
So that is one order. There are another 2 orders from Telangana which are into that active. That is around 10,000 crores. So the book is there. The execution part only depends again on the payments which they receive. So they are the one of the only firms which do not work if they don't get the payments of the previous work done. So that's where I think the whole difference becomes.
Okay, so that's the view that's coming in on BHEL. Vivek seems to be rather bearish on BHEL, but that's not the view that's shared by the other two guests. Before we move on, here's a quick recap of all the guest view on the stocks that we've covered till now. Okay, infrastructure seems to be the theme that we're sticking to. IRB Infra is the next stock that we'll discuss. The counter has been rallying significantly from the lows that we've seen in this month, and you know, the entire excitement came in with this Bharatmala project. IRB is one of the leading toll operators and EPC manufacturers in India. Will IRB benefit because of the government's move on infrastructure, especially the Bharatmala project? I'll start with you, Vivek. Do you have a view on IRB Infra? Does it benefit, or is it just a hype that's created?
Well, it certainly will benefit because given the size and scale of investment planned over the time period, well, everybody and his uncle is going to get some orders. IRB obviously has been one of the larger players in the road construction and tolling kind of. So IRB obviously is going to get some part of the pie depending upon what they manage to get. But just the size of the opportunity, macro growth story is not enough for a stock to deliver returns. Management quality, credibility. I mean, at IRB over the last 5-7 years, I mean, leaves a lot to be desired in terms of disclosures, in terms of issues with the balance sheet, and so on and so forth. So, although opportunity is large, I do not rule out that IRB will also grow. But I think there are better opportunities to play where you don't at least have management issues, you don't have governance related issues, where IRB clearly doesn't. It doesn't check that. I mean, you can't check that box with confidence. It still leaves enough uncertainty which could deliver some negative surprise at some point of time, which you've never even thought about.
Okay, Sharmila, do you agree with Vivek on IRB?
Well, I'm positive on the stock, so in that sense I disagree. I think that perhaps for me the most exciting thing about the presentation that we saw day before yesterday was the way the entire infra bit was fleshed out, you know, with the kind of order size they're talking of, even if you are saying that will happen over the next 4 or 5 years, whatever, and what it means for road building. If you break it down and if you say the kind of spend that you think that you will do for roads in a year, it's almost 4 or 5 times of what we are currently estimating that we'll spend on roads. Again, I think that the more established names within road building will benefit. Then I think Mr. Gadkari also went on to say that he will give NHAI more power. So I think that's also good news. The fact that IRB already has a 9,000 crore kind of an order book, and this can only increase given the kind of visibility that we are seeing for road projects. That's what is very important. And the fact that, you know, a lot of the BOT projects, etc., they managed to transfer to the InvITs bit, that also leaves them free to sort of bid for a lot of road projects going ahead. So yes, I agree with the corporate governance concern. Absolutely, but I think just seeing this entire road space, I think you should be positive on a lot of companies within that space. It's just that I'm highlighting our IRB today, but there would be other names within that space also that I would be positive on.
What's your top play in the infrastructure space then?
So absolutely, I think IRB would be one of them. I think you could look at NBCC, you could look at Sadbhav. Yes, I think, you know, that's a very good name. You could look at NCC. I think you could look at that ITNL. So I think there are a whole host of established names within that space which you could look at. And I think, you know, that for me, as I said, was the most exciting bit about that presentation.
Okay, so a thumbs up and thumbs down on IRB. What are you saying?
I don't have a view, but the only point which I see is if the infrastructure spend is going to be X multiple, then IRB might be the beneficiary of especially the project which has just launched, because of the Maharashtra being the main phase 1 beneficiary of that. That's the only point which I see benefit to that.
Okay, so Sameer is neutral on IRB at this point of time. Vivek shares a negative view. Sharmila is bullish on IRB Infra. So again, all three different divergent views that's coming in. for IRB Infra. And the final stock that we're talking about is India Cements. Cement as a pack has done extremely well. India Cements is up almost 20% from the recent low. What exactly is happening on the cement front? Let's ask our guest. I'll start with you only, Samir. Do you like the cement space? Do you like India Cements?
So I like cement space mainly because, you know, it's like a pass and parcel of infrastructure. The only problem with India Cement is the volume has been flattish for the few quarters. And somehow, if you see the numbers, their employee cost has gone 27-28% per ton. So it was 432 last quarter as compared to 330. So that is the major concern, that how come the employee cost is going up. Generally, power cost going up and everything going up is a thing, but employee cost becomes more of a variable. So as the production goes up, you do more units, you do more employee generation, and that happens. That is one of the major concerns for me. And the second is, for that kind of low capacity utilization, they have to take higher debt to help them in the working capital side. That concerns me. So I rather look at people who have a pan-India presence like Ultratech or a Shree Cement kind of a firm.
Okay.
So that is the space where I like.
Sharmila, what's your view on India Cements?
Well, I would be bullish because I think that precisely just taking off from there, I think the volumes were low, realizations were low, and we've seen cement results of a lot of other stocks, and I think there is reason to believe that we are seeing, you know, that uptrend, which I think will reflect in India Cement numbers also when they're declared this quarter. So I am expecting volumes to improve, I am expecting realizations to improve, and I think even when we talk of flat volumes, let's remember they're flat volumes in an environment where, you know, in the south they actually saw pricing pressure, etc., and there was a general sort of you know, the business in that part of the country wasn't great, and the fact that they have actually managed to get into new territories where they didn't have presence earlier. And I think, you know, to just link it with the stock that I liked earlier, I think if you're going to see this kind of a spend, big spend coming in on infra, I think cement companies are obvious beneficiaries. And I mean, you know, it's directly correlated positively to your GDP. So if you are positive on that whole piece and you think that your GDP will recover in quarters to come, I think that cement is an obvious space to be in. And this would be one stock.
So what would your top pick be in the cement space?
See, Ultratech has already run up quite a bit. That would be obviously a stock that I like. So then I think, you know, you have to look at what price the stock is available at and what is like the, you know, what kind of return you can get. So I think from that perspective, I like India Cement because I think, you know, it's at around 195, 196. I could easily see a target of 250, 260 on the stock.
Okay, Vivek, do you agree with Samir put out some strong points in terms of, you know, cost structure. There's a high cost structure. Sharmila is rather bullish on it in terms of the pricing. Which side would you be on?
Well, I'm once more not very positive. Not that I'm negative on cement, it's just that there are better opportunities available. If I were to look only at South, then maybe a Ramco or a Ramco Cements or a Dalmia Bharat are my preferred bets, or an Ultratech, although expensive, still go with the largest and national play. India Cements, if we were to straight come to valuation, that's some $100 a ton enterprise value versus most others upwards of $150. There's a reason why India Cements has always been, I mean, it's not that the discount is today. Over the last 15 years, if one were to really map it, India Cements has always traded at a steep discount to others. And rightly so, because of underperformance on growth, on profitability, on return on capital, on quality of the balance sheet. In every which way, India Cements has been an inferior company, not today or yesterday, but 15 years I could look at it. So here again, the performance raises questions on the management quality. Not that there are serious governance issues that one would not pardon them. I mean, it's okay. I mean, for all the other activities which the promoters seem to be getting into controversies from time to time, I'm willing to forgive them. But but on underperformance in terms of absolute numbers, I would like to, I mean, it leaves a lot to be desired. So rather than bet on India Cements, I would bet on cement. If it is South, Dalmia Bharat or Ramco is a preferred bet. If it's pan-India, then an Ultratech is definitely better. Although they look expensive, they still deliver the numbers.
But what about, you know, the balance sheet cleanup that they're talking about? So it's like in the same boat as what Reliance Infra is. You spoke about the promoter quality, both of them have. Underperformance, both of them have. You're bullish on Reliance Infra, you're saying you're letting it go, but why not for India Cements then?
Okay.
It's exactly the same thing.
Exactly. I would love to see that improvement in India Cements. I would love to see concrete initiatives and intent on part of promoters of India Cements, which I'm still not seeing, which at least in Reliance Infra, I'm seeing that over the last 2-3 years. I mean, Reliance Infra sold off their cement business. I mean, they have put some other assets and other businesses also on the block. So there is a clear intent. In India Cements, I would like to see that. I mean, if their EBITDA per ton is like 40% lower than your peer group who operates in the same geography, has the same material cost, has the same logistics cost, then I would like the India Cements to improve their profitability.
So on a lighter note, India Cements can't sell their cement business.
That's the only thing. They can only work on the IPL then.
They can sell Chennai Super Kings.
But won't Chennai Super Kings be the part of the IPL this year again now? I think that's something that they can look forward to now.
That I doubt they'll be able to sell.
Okay, on that note, before we wrap the show, here's a quick recap of all the guest view on the stocks that we've covered till now. Okay, Vivek, Sharmila, Samir, thank you so much for joining us on the show. With that, it's a wrap on Hot Money. But before we start with Ask BQ, Shoppers Stop posted a weak set of numbers for the September quarter. To discuss the second quarter earnings and future details, further details, Agam Vakil spoke with Govind Shirkhande, MD of Shoppers Stop, on its second quarter earnings. Let's hear into what they had to say.
There certainly has been a lot of weakness when it comes to Shoppers Stop's second quarter, considering the fact that we have seen a decline in its top line. To take us through this quarter and perhaps the outlook for the company, we're in conversation with Mr. Govind Shrikhande. He's the Customer Care Associate and Managing Director of the company. Thanks for joining us, Mr. Shrikhande. Starting off with the first question on revenues, we have seen some amount of weakness there. What factors do you attribute to this quarter's weakness?
You have to look at quarter two result in context of what's really happened because of GST. So GST got implemented from 1st of July and it impacted supplies as well as sales for both July and August. And September we definitely saw a recovery. Also because GST was coming in, the entire retail industry and fashion industry decided to prepone sales. So 100 crore sale actually moved out into quarter one. So quarter one saw a very, very strong 18% like-to-like growth. Logically, it should have been in the region of 8 or 10%. 8% came on account of this shift of sale. So you're seeing an impact of shift of sale and GST in the quarter two result as far as the top line growth is concerned. As I mentioned, September, we already seen recovery of sale through Puja and Dashera. October, Diwali is already on and we have seen a 8 to 9% like-to-like growth. So normalcy in top line has already come back and we see clearly that second half of this year should be quite normal, 8 or 9% like-to-like growth.
All right, so for accounting standards, as Hypercity moves out, how would your income statement look like? What would it look like as we move in?
So basically, if you look at our results, our standalone results don't get impacted at all. Only the balance sheet will change. Hypercity results come in the consolidated numbers. So what will happen is the debt on consolidated results will move out completely once Hypercity moves out to future retail, number one. Number two, our investments come back. After the impairment that we already taken in, we'll get about 120 crore cash back into the business, so debt will further fall. And because Hypercity was already creating a large amount of loss, the consolidated numbers were looking weak, so consol will completely move out. So basically what you'll start seeing from quarter one of next financial year would be only the standalone results, which should be very, very strong.
All right, Mr. Shrikhande, I also would like a word on your expansion plans. That is, it could have to do with Shoppers Stop or, for that matter, any of your other specialty retailing stores as well.
Sure. So we are focusing on growth of not only the department store format, but also the specialty retail. So we have opened one more store already in this quarter and 2 more stores slated to open during the balanced year. So we should end up the year at about 83. We are targeting to be 100 stores by 2020 in the department store format. In the specialty retail, which is beauty, we are currently at about 83 stores. We are targeting to open 10 stores a year in the next year. So we again should cross a century there as well. So we should be in the region of 100 stores in the department store and about 115 in the specialty retail.
And finally, Mr. Srikhande, when it comes to this particular quarter, if you take your festive sales into account, and keeping the outlook of the next second half this financial year as well, can you tell us a little more about the kind of margins or the kind of trends that you expect to pan out?
So typically second half of the year starts off with the festivities of Dussehra, and then there is Christmas, there is marriage season also that comes up in December, and Q4 typically has sale period and new merchandise launch. So second of the year we believe 8 to 9% like-to-like growth definitely. We should definitely see improvement in our EBITDA margins as well. So we should end up the year above 6%, and with all the actions that we are taken right now, we are heading well towards our crossing 8% EBITDA by 1920.
Well, Mr. Srikhande, thank you for joining us and taking us through the quarter's earnings as well as the outlook for the second half of this financial year.
Are we live?